Excellencies, distinguished guests, ladies and gentlemen, good morning. It is with great pleasure that I welcome you to our first Central Banking Conference. I want to extend a special welcome to our speakers who were gracious enough to accept our invitation. For our foreign participants, a special word of thanks, and we hope that you will enjoy your stay in St. Maarten. Ladies and gentlemen, as the Central Bank of the Monetary Union, we are responsible for the monetary policy for the entire Union. However, since the bank is headquartered in Willemstad, its activities and functions may sometimes appear unclear to those outside St. Maarten's financial services and government. Hopefully, through conferences like this, we can offer a glimpse inside the bank and a better understanding of its roles in the St. Maarten community. We wish to demonstrate that the bank remains a vital institution in fostering the further social and economic growth of this young country. Another important objective of the Central Banking Conference is to provide practitioners of the science of economics with more insight into the development in the area of macroeconomics, banking, and finance that are particularly relevant for the Caribbean central banks, government, and the financial sector. The overarching theme of this year's conference is the challenges and opportunities of Caribbean central banking in the aftermath of the 2008 global financial crisis, an event whose repercussions are still being felt. Since the start of the crisis, central banks in various countries have been at the forefront with policy responses to mitigate its impact on the economy. Ladies and gentlemen, central banks, in their crucial role as lenders of last resort, are able to create much-needed liquidity in times of shocks through purchases of financial instruments. Nevertheless, challenges remain. An undue burden has been placed on central banks, making them virtually solely responsible for fostering economic growth. Because of this role, we consider it of utmost importance to foster discussion and share experiences with local and regional peers on these important topics that can contribute to more resilient financial sector and a better macroeconomic environment. Over the course of these 2 days, experts from the Eastern Caribbean Central Bank, the Bank of Jamaica, the Caribbean Regional Technical Assistance Center of the IMF, the Center of Latin American Monetary Studies, University of Tilburg, the University of West Indies, and the Caribbean Center for Money and Finance will share their views on monetary unions and monetary policy in the Caribbean context, the importance of stability and resilience within the financial system, and behavioral economics, and the benefits of financial literacy. All of these topics are of particular relevance for both Curaçao and St. Maarten. Ladies and gentlemen, since becoming a monetary union in 2010, extensive discussion have been held on the benefits and cost of monetary union between Curaçao and St. Maarten, and whether it is in our collective interest to forge ahead together or go our separate ways. One of the main goals of the bank's strategic plan is to increase public knowledge about monetary unions to facilitate productive dialogue. We are very glad, therefore, that the Deputy Governor of Eastern Caribbean Central Bank, Mr. Trevor Brathwaite, is here today to provide us with insights into the Caribbean Monetary Union that has been in existence since 1983. His views and experience will no doubt prove invaluable to our own ongoing deliberation on the cost and benefits of monetary unions, particularly given the many similarities that exist between the monetary union of Curaçao and St. Maarten and that of the Eastern Caribbean, including the size and openness of the economies of member countries, their vulnerabilities to external shocks, and the exchange rate peg to the US dollar. With respect to monetary policy, we will address the topic of transmission mechanism during this conference. The monetary transmission mechanism is an interesting but complex topic that concerns how policy-induced changes in the nominal stock of money or the short-term interest rate impact economic activities. In other words, the monetary transmission mechanism assesses the effectiveness of monetary policy. Ms. Carrie-Ann Williams from the Bank of Jamaica will share with us her empirical work on the monetary transmission mechanism in Jamaica. Another consequence of the 2008 global financial crisis was a significant tightening of the regulatory framework of the international financial system. In response, the bank has made a number of efforts to enhance the effectiveness of its supervisory instruments, improve transparency in the local financial market, and intensify its efforts to provide more protection for consumers in the financial transaction. Similar to other central banks, the bank has also created the Financial Stability Department, which actively monitors and identifies risk in the financial sector with the objective of reducing the potential build-up of risk in the financial sector of Curaçao and St. Martin, thereby reducing potential spillover into the real economy. During the past 2 years, a lot of attention has been given to enhancing the awareness of our financial sector regarding the importance of financial stability. Therefore, I am delighted that Dr. Shelton Nichols from the Caribbean Regional Technical Assistance Center, the CARTAC of IMF, and Dr. Alberto Ortiz Bolaños from the Center of Latin American Monetary Studies will shed some light on the importance of financial stability and resilience from a Latin American and Caribbean perspective. During the conference, ladies and gentlemen, we will also address the topic of behavioral economics and its impact on personal finance. Behavioral economics is a relatively new field in economics that attempts to incorporate insights from psychology into economic models and analyses. In this context, behavioral economics questions the traditional assumptions of fully rational individuals with purely self-centered preferences. This field of economics has increased rapidly over the last decade and offers a new perspective on individual decision-making and consumer protection. These topics are very relevant today as government and central banks focus on empowering consumers through financial education. In Curaçao and St. Martin, improving financial literacy among their citizens is crucial to combat illicit activities such as loan sharking, whereby people fall victim to unscrupulous creditors. Although we can attempt to combat these practices through more legislation, financial education on these practices is critical to enable the consumer to make better financial decisions. That is why we have invited Professor Prats from University of Tilburg and Dr. Dave Sheraton from the Caribbean Center of Money and Finance and the University of West Indies to share their views on behavioral economics and its implication for personal finance. And finally, we will conclude this conference with various public presentations on the task and responsibility of the Central Bank of Curaçao and St. Martin and its essential role in the macroeconomic and financial environment in both countries. In particular, we will focus on the areas of monetary supervision and macroprudential supervision. Ladies and gentlemen, let me conclude by thanking you again for your presence and wishing you a fruitful discussion during the next 2 days.
Protocol having been duly observed, permit me to say to you, distinguished guests, ladies and gentlemen, members of the press, a warm good morning on St. Martin to you. And especially a warm welcome to our guests from abroad, in particular, the presenters who are here to share their knowledge and experience with us. This Central Bank Conference is a first for the Central Bank of Curaçao and St. Martin, and I'm proud that St. Martin was chosen to inaugurate this conference. I congratulate the bank for taking the initiative in planning and organizing this conference, and I do hope that we will see more of its kind in future. This conference could not have come at a more propitious moment in St. Martin. 2016 has been a year of fiscal firsts, and we have made gigantic strides forward towards an improved budgetary process. For the first time since gaining our constitutional status as an autonomous country within the Kingdom of the Netherlands in 2010, St. Maarten has achieved a realistic and balanced budget for 2016 and beyond. A budget based not on expected, projected revenues, based on measures that will be taken, but a budget based on actual revenues, taking an average of the actual income over the past 3 years. If approved by the CFT, the Financial Supervisory Board, and they have whispered in my ear quite silently already that this budget they're very satisfied with and that we could expect an approval. But if approved, the government will once again be in a position to be able to borrow on the capital market to finance capital investments that will spur economic growth. After all, if we are wise, we should not live beyond our means. Continued fiscal prudence of this sort will help St. Maarten navigate a world that has still not fully recovered from the global financial crisis in 2008. We are fortunate that our financial system was not overly exposed to the financial contagion of 2008, like so many other countries in the world. An exposure that prompted many central banks to greatly inflate their balance sheet as they purchased assets and injected much needed liquidity into bruised markets to restore confidence. The year 2016 is also the first time since St. Maarten became an autonomous country in 2010 that has satisfied the CFT as far as the budget is concerned. I cannot emphasize enough just how important a milestone this is for St. Maarten. The 2016 budget will serve as a framework for multi-annual budgets, which is also the first. This framework provides us with a solid base for solving our current fiscal issues, allowing the government to focus more effort on stimulating the economy. If we manage to continue with balanced budgets for 2017 and 2018, St. Maarten can ask the CFT to vacate itself, and the country can establish its own financial oversight mechanism. After the successful passing of the budget 2016, we began the process of establishing a national development bank for St. Maarten. The objective of this bank will be to promote projects with an evident contribution to an economic development that is both sustainable and socially responsible. In addition to providing financial advice, the Development Bank will also provide technical and administrative support. A successful development bank will be one more instrument at St. Maarten's disposal to set it on the road towards sustainable economic development that will benefit all of its citizens. Such a bank will invest not only in infrastructure, but also in our people to positively develop the country and boost economic growth. When people achieve their potential, the result is a multiplier effect on the economy. That is the best investment that we can make. Ladies and gentlemen, because we are in a monetary union with Curaçao, specific legislative synchronization is required between Curaçao and St. Martin for the bank to carry out its supervisory role effectively across the union. Therefore, Parliament must pass the necessary legislation, the so-called harmonization law, to bring St. Martin in line with the international regulatory framework and norms for prudent financial sector supervision. Doing so can only reinforce investor confidence in the stability and resilience of our banking and financial services sector. I would be remiss if I did not mention the sometimes intense discussions held within our society on the benefits and drawbacks of maintaining a monetary union with Curaçao, especially since the primary purpose of dismantling the Netherlands Antilles in 2010 was for St. Martin to chart a new course and make decisions for itself. A choice was made for a monetary union with Curaçao at the time of the dissolution of the Netherlands Antilles because we did not have our own central bank or the infrastructure to manage these functions, let alone the ability to supervise our financial institutions. The nation-building challenges that we faced had to be overcome, and they were daunting challenges, leaving us little or no time to give attention to other areas such as central banking. Given the rich cash that exists in the central bank and available to St. Martin, the formidable challenge of St. Martin in building up the necessary capacity and institutions, we chose for a monetary union, which was the logical choice at the time. I am truly looking forward to hearing from the Deputy Governor of the Eastern Caribbean Central Bank, Mr. Trevor Brathwaite, on the experience of another Caribbean monetary union that has been in existence for more than 30 years. Clearly, the ECCB stands as a living example of a working monetary union in Caribbean context. A small, open economy like ours, which relies heavily on the United States for trade, provides all the more reason for prudent financial sector supervision and the maintenance of a sound regulatory framework that tempers any concerns and encourages greater investor confidence in doing business here. The next step in this ongoing process for St. Martin to become compliant with the US government's Foreign Account Tax Compliance Act, otherwise known as FATCA, by 2018. The government of the Netherlands has committed itself to providing the Caribbean part of the kingdom with assistance on the software to help ensure this compliance. Due to the relatively small size of our financial sector and the limited government resources at our disposal, St. Martin opted, under the treaty, the FATCA treaty, to have its local banks do their own reporting directly to the American tax authorities. This is an example of one more step St. Martin has taken to be regarded as a country that complies with international financial norms and guidelines. This conference will also touch on other topics, such as financial stability and financial literacy, that are equally important and extremely relevant for St. Martin. Increasing the financial literacy of our people, especially our young people, is a vital step in improving the overall financial stability of St. Martin. Ladies and gentlemen, I want to thank you again for attending this conference and for giving me your attention. I once more congratulate the bank on hosting this conference and look forward to them hosting many more conferences, preferably on St. Martin. And I hope that you all will take away something positive from it. I wish you all a good and healthy discussion. Thank you very much.